Have you ever wondered how some real estate investors seem to effortlessly grow their wealth while others struggle to keep up? The secret lies in understanding and leveraging the concept of equity spread in property investments. Dive into this eye-opening exploration of strategies that can transform your real estate portfolio from stagnant to thriving. We are growthsense.com. We built a platform that allows investors to buy, sell, and invest in real estate properties of all kinds, in all shapes, and in all conditions. Let's get right into it. Equity spread is all about the difference between what you pay for a property and what it's worth after appreciation. Imagine buying a home for $300,000 and watching its value soar to $400,000. That's a $100,000 equity spread. Now, how do you maximize these gains? Here's what you need to know. Number 1. Diversification benefits. Diversifying with real estate can stabilize your investment portfolio by offsetting the unpredictability of stocks and bonds. Think of it as a financial cushion during market volatility. Number 2. Equity calculation. It's essential to know your numbers. Calculate equity by subtracting any outstanding debt from your property's current market value. This not only informs your financial health, but uncovers potential for growth through improvements. Number 3. Strategies for increasing equity. Regular mortgage payments are just the start. Renovations like modern kitchen updates can significantly boost property value, aligning improvements with market demand to increase your equity and rental income. Number 4. Leveraging equity. Use existing equity for new investments through HELOCs or refinancing. But be cautious. Over-leveraging can lead to financial headaches if the market shifts unexpectedly. Always keep a safety net. Number 5. Public and private real estate investments. REITs offer liquidity and easy market entry, while private equity funds target high-value properties with potentially higher returns, though less liquidity. A balanced approach can optimize risk and reward in your portfolio. Number 6. Geographic and sector diversification. Spreading investments across different locations and sectors reduces risk. Invest in various property types and regions to capture diverse income streams and stabilize returns. Number 7. Risk considerations. Real estate carries inherent risks like market changes and unforeseen costs. Detailed risk assessment is crucial. Prepare for regulatory changes or shifts that could impact your investment's performance. Understanding the importance of equity in real estate means recognizing its role as your financial stake and leveraging it wisely for future opportunities. Careful management, strategic renovations, and informed decisions can maximize your property's potential. But here's the catch. Without a clear strategy, your investments might not reach their full potential. Stay tuned as we reveal how strategic improvements and economic factors like interest rates can influence your equity spread, setting you up for long-term success. Ready to take your real estate game to the next level? Visit growthsense.com, where we connect savvy investors with prime opportunities in distressed, wholesale, foreclosure, and rehab properties. Our platform offers the tools and insights you need to maximize your equity spread and stay ahead in the competitive real estate market.